Do you hear the sound of thunder? Like a sudden explosion, it signals that something is about to change. In the world of trading, shifts can happen quickly and with intensity. One of these key moments is when the RSI crosses the 50 level. Today, we're going to explore why breaking through this level can be such a powerful and impactful signal in the market. So, let's dive in. What is RSI and its important levels? Let's start with a quick recap of what the RSI, or Relative Strength Index, actually is. The RSI is a momentum oscillator that measures the strength and speed of price movements. Similar to how a car's speedometer tells you how fast you're driving and how quickly you're accelerating or decelerating, the RSI helps you gauge the market's momentum and direction. RSI ranges between 0 and 100, with 3 key zones. Above 70, which indicates overbought conditions, below 30, which indicates oversold conditions, and the 50 level, which sits right in the middle. If you're unsure about overbought and oversold levels, don't worry, we've covered them in detail in episode 3. Check the link above to learn more. How to use RSI level 50 in trend analysis. Why is the 50 level so important? Simply put, it acts as a baseline for trend direction. When the RSI is above 50, it typically means bullish momentum is dominant, buyers are in control, and the market may continue to rise. On the other hand, when the RSI is below 50, it signals bearish momentum, meaning sellers have the upper hand, and the market might continue to drop. 2 important uses of the RSI level 50. 1. Identifying trend reversals from bullish to bearish and vice versa. Think of level 50 as a dividing line between buyers and sellers. When the RSI crosses above 50, it can often mark the beginning of an uptrend. Real market example. In this chart, after the RSI crossed above the 50 level, an uptrend formed in the price. Similarly, when it crosses below 50, it can indicate the start of a downtrend. Real market example. In this chart, after the RSI crossed below the 50 level, a downtrend formed in the price. This makes it incredibly useful for identifying trend changes. An important tip. Pay attention to the slope of the RSI when it crosses the 50 level. A steep slope during an upward breakout indicates strong bullish momentum, while a gradual slope suggests weaker bullish momentum. Similarly, a steep slope during a downward breakout signals strong bearish momentum, whereas a gradual slope indicates weaker bearish pressure. Understanding these nuances can help you better assess the strength of the trend and adjust your trading strategy accordingly. In this stock market example, the RSI has broken above the 50 level with an upward angle of approximately 70 degrees. Following this breakout, a strong uptrend has formed in the stock. Meanwhile, in another chart, we can see that the RSI has broken above the 50 level at an angle of approximately 35 degrees. Following this, a minor uptrend formed, but it lacked strong momentum. 2. Detecting range-bound markets. Here's another powerful way to utilize the level 50, identifying range-bound markets. When the RSI hovers around the 50 level, typically between 45 and 55, though this range can vary depending on market conditions and the analyst's perspective, it often signals a consolidation phase or sideways price movement. During these periods, it's generally better to avoid taking large trend-based trades. Instead, focus on spotting potential breakout opportunities, as these can lead to significant moves once the consolidation ends. In this real market example, the RSI fluctuated within the 45 to 55 range for a period, indicating a ranging market. However, once the RSI broke above the 55 level, a strong upward trend emerged in the price. That's the end of today's session. Make sure to practice so that by the next session, you'll have a solid grasp of the 50 level. In the next session, we'll be discussing the combination of RSI and Bollinger Bands, which is a crucial topic. So, don't forget to subscribe so you won't miss the next video. Your likes and comments mean a lot to us. See you next time.